So we're ready to call the meeting to order and start with, we have a quorum.
Yes, we have a quorum.
Non-agenda public comment.
No public comment.
All right. Then that leads us to new business. First item on the agenda, action requested, is presentation of the fiscal year 2018 budget, and we have Ted LaSalvia to do that for us. Thank you, Ted.
Good morning, everybody. You should have my schedules in front of you. I'm going to go through a PowerPoint slide deck explaining the FY18 budget. Important to note, two main components for the budget: the administrative expenses and the investment management expenses. Obviously, it's more like a 25-75 split if I was to do the exact dollar values. A couple things to set this up. When we started with the FY17 budget, we thought we were going to be in a particular area at the end of the FY16 year. That did not happen, so you'll see that the the projected values are lower than what we had originally budgeted for FY17. We've been in that position since the beginning of the year. You'll hear me when I talk about it in the January financial statements when I'm comparing actual results to where we thought we would wind up. So starting off with the FY18 budget, we have a budget of $48 million. This is up $1 million or 2.2% over what we had budgeted for FY17. Administrative expenses are actually down 2.1%, about $300,000 at $13.3 million. Investment management expenses are up $1.3 million over budget, or 4.0%. And breaking that down, the administrative budget has about a $300,000 decrease over FY17 and about a 1.4% increase over the FY17 projection. So once again, projection values will probably be lower than what we had originally budgeted. So I will primarily focus on the budget-to-budget numbers. If you have any questions, obviously, when we don't hesitate to interrupt me. The primary drivers of the decrease from the FY17 budget, outside legal fees, salary costs, which we will talk about here shortly, fiduciary insurance or premiums are continuing to drop, and general operations expense. Salaries and personnel. Over the last 2 years, SDCERS has gone from about 58 headcount to now a projected 50 headcount for FY18. This is $7.4 million in salaries and fringe for FY18. And understanding the salaries and personnel expense, the fringe rates are actually pass-through costs from the city of San Diego. We do not know what they will be. The fringe costs that we have estimated in the budget for this year are the fringe costs that exist right at this moment in time. Given the large jump in the ADC payment, I expect a significant increase in those rates. But it's not something we manage to. It's not something we can affect. So primarily, we are focused on those costs that we control ourselves. We have about $159,000 decrease, or 2.3%, from the FY17 budget. This reflects a reduction of 4 positions that are open at this point in time. These were lower-level positions that we did not fill but had budgeted for in FY17. The increase over FY17 projections due to the expected filling of a couple of open positions, and that will be filled for the entire year. So we have people that have been put into positions but haven't been here for the full year. Hence, the projected number will be lower than what we would expect had they been here for a full 12 months. Once again, the salary fringe costs will be finalized by the city when they're done with their budget. I will probably give a number in the May meeting if it is a significant increase, to let the board know what has occurred. On the IT side, I will say that the primary cause for increases there are just contractual in nature. They're at $2.1 million for FY18, increased 3.8% over the FY17 budget. The capital budget for FY18 reflects a new hardware costs that we did not have in FY17. There's this core network switch that IT needs to replace. That's a pretty hefty cost. In addition, the new SDCERS board and agenda voting software will also be pushed from FY17 into the FY18 year. So our projected CapEx is pretty low for this fiscal year. We have a couple of new items, a potential upgrade to the accounting system. It's just a periodic, once every 3 years. We can do this when Microsoft basically puts out a newer version of our accounting software. And then additional hardware replacements and a website upgrade. From the legal side, poor Johnny's budget has gone down year after year. And the budget of $0.4 million, it decreased about $100,000 or 25% over the FY17 budget. And then there's a slight increase over the FY17 projection. The PSE litigation cases are expected to complete here in FY17, and then there's a provision for litigation on the overpayment cases that hopefully will be resolved in FY18. We have decreased fiduciary expense due to fewer projected consultations. Johnny knows a lot more about that area now, and consequently, we expect lower costs. There is one thing that legal took on this year that they had not taken on in previous years. It's just a budget reclassification. Legal disability costs will now be reported within the legal division. So when you look at the increase over projected, that's one of the primary drivers. There's a general ops budget of $3.4 million for FY18. This decreased $173,000 or 4.9%, and $174,000, 4.9% over the FY17 budget and projection. We have a decrease for actuary services, fiduciary insurance, depreciation, and temp labor over the FY17 projection. The 600-pound gorilla of the budget, the investment management fees, Carol's near and dear to her heart. We have a 4.0% fee increase over the FY17 budget. We have a 9.7% fee increase over the FY17 projection. So some key assumptions: assumed growth in our assets under management of 7%, projected average assets of $7.3 billion. And that number, I placed in here for the first time this year because it's important to know that that is the basis for which we are actually looking at investment management fees, especially when we're deriving the basis point calculation. The primary drivers, though, if you look at the schedules themselves, are increases in real estate and private equity and infrastructure. There's a new series to be added on the private equity side, and then there's new fund commitments in real estate. We're changing from one type of investment to investment funds on the real estate side, right? Separate properties for shares in other funds, as well as new commitments in the real estate opportunity funds. These investments have a higher basis point fee calculation, hence you will see them as the drivers for the change in the basis points themselves. Lastly, I want to commend the investments team in actually looking at something that we've talked about in the board meetings and I think is not quite easily understood, and that's that whole idea of negative cash flow. So at the end of the day, when we get the large ADC payment, that's a big infusion of cash during the year. But since both the city and the airport are in what you call a negative cash flow position, where their benefits paid out for retirees is higher than the total contributions coming in, that has to be funded through reductions in our investment portfolio. And consequently, that should factor into the calculation for the investments under management, because you have to figure out where you're going to be at the end of the year. You can't just assume that here's what we were average for the year, take 7% of that, and that's where we should wind up. No, we need to reflect in the fact that our negative cash flow actually is a drag on the investment portfolio. But it is something that is taken into account from an actuarial perspective when we come up with the discount rate and the actuarial liabilities, et cetera. So here's the depiction of the basis point calculations. We're expecting about 1 basis point increase on the public markets. The total portfolio goes up 3 basis points, primarily for the drivers that I spoke about, private equity, and infrastructure, and real estate. So in summary, SDCERS, we continue to manage this for those items we can specifically manage. Membership growth of 8%. Number of pension plan tiers has increased about 150% since 2009, yet the number of people dealing with all this complexity has decreased 24% since the peak in 2009. Administrative expenses have decreased 33% from the 2007 level. If I was a publicly traded company or somebody on the outside, I would love to have them show me an organization that has maintained costs as well as SDCERS has during this time period. And with that, I would like to open the floor to any questions or comments that you have about any of the information I've presented.
Do you have any kind of an estimate of how much of that 33% decrease that has been seen since 2007 is the result of resolving litigation and decreasing litigation expense?
I don't have those figures for you, but I've looked at legal costs, and I've seen the legal budget significantly in excess of north of $1 million. And if you take a look at that value, it's...
That is a significant portion of the decrease is litigation. We also employed more external
headcount.
consultants outside of the legal space 10 years ago than we currently do. In the IT space, we had a lot of extra consultants that came in from the outside. So, but we've also had good success in reducing, in the last 5 years, for example, our fiduciary insurance expense, which was as high as $600,000 and now is in the $300,000 rank.
And one other item, so with respect to the 50 headcount, if you were to say, what does the organization look like today versus what it looked like, 10 years ago, when we talk about position upgrades, the skill sets of the employees manning those positions significantly higher. If you've seen Cynthia Queen's, report out some of the metrics that she promotes, the work that the benefit... the work that the Benefits Administration Group does on the calculation of benefits, the implementation of the SDCERS system, all of these items have served us well in managing our cost structure.
Ed?
Okay. So there are disability legal costs that had always been reported under disability. The problem with that is the disability group doesn't manage those costs. They don't.
It's like adjudicator fees.
Yes.
So they were in general before?
They were, yes, under the disability line, so.
Alan?
So, where does all the money?
How do we pay this budget? Where does the money come from, Ed? So investment comes from investment.
Yes.
Right out of the trust fund. So, but the 13.3, we changed how we collect our money to fill that budget, correct?
Correct.
So explain that real quick, if you can quickly.
Administrative expenses are funded by the plan sponsors as a component now of the ADC payment.
As a component of the 3 ADC payments.
Yes.
Okay, so like the 13.3 isn't solely coming from the city. It's apportioned.
Say 92 cents on the dollar.
Okay, all right.
Good question. Carol?
Oh, I just wanted to make a comment because I'd love to talk about investment management expenses. I just think it's important to point out that when you look at the different asset classes, the real estate seems to be a very big number, and it's bigger than private equity, which is actually a slightly higher allocation overall. And the reason for that, in part, is that we are in a manager of manager structure with private equity, so the actual fees to the underlying funds are paid within the fund, so we don't really pay them directly. But I think it's, and that's not the case with real estate. I think it's important at some level to understand what we're paying for private equity, and there's that new legislation that requires some new reporting on that is going to go a long way to help us understand kind of what the full cost of private equity is, I think, right? So,
Correct.
anyway, just an observation.
And this is why I like Carol on the V&G committee.
And Carol, when the investment committee and our investment staff make decisions about allocations and particular investments even, they take into account the burden or the cost on those investments when they consider whether that is a wise place to put the money.
Right, and that's, of course, part of the the recommendation or the analysis by the consultant is that they'll rank the fee package relative to the industry or peers, and it's certainly something to be considered.
The only caveat to that is this is cost-related only. So the basis point calculation and discussing the actual fees themselves, the big issue is whether or not we have visibility or transparency into what those funds are actually charging us. But the fact that the cost structure is higher has to be weighed against the actual returns from those funds, which, I mean, if you compared them to, say, fixed income, definitely, those assets return higher returns.
Great. Mark?
Something else, two other things that I would like to add here. First, the city of San Diego's concurrently going through their budget process at the moment, and they are challenged with trying to make ends meet given that there was a large pension increase payment. So the mayoral departments have all been instructed to submit their budget proposals for fiscal 18 that reflect a 3.5% reduction year over year. So in the fall, I received a letter from the city's chief operating officer saying, while the city does not directly control or approve or veto, for that matter, our budget, as a show of solidarity, my word, not his, they were asking that we also give serious consideration to reducing our budgets 3.5%. So I wanted you to be aware of the fact that it's certainly going to be a sensitive issue to the city, and maybe to some degree with the port and the airport as well, that we are reducing costs, but not by the same degree that the mayoral departments are. We did make a number of cost reductions, which Ted talked about. They totaled over $500,000. The reductions in total were 3.7% of our budget. So were it not for some contractual increases, for example, in our rent costs or our outsourced IT costs or fringe rate increases, we would have hit that bogey. As it is, we're down about 2.1 versus 3.5. So I just wanted you to all be aware of that. I think our long-term message, as Ted mentioned, has been very positive. We've had a very good disciplined focus on controlling costs over the long term. But we haven't been ignoring our services to our members either. When our head count has now gone from 65 back in 2009 to 50 for the upcoming year. And if you were to look at where have those head count come out of the organization, it's like virtually everyone's given at the office. So there have been reductions in the finance department. There have been reductions in the IT area. Some of them in contracted headcount, so they don't show up in our official 50 because they're outsourced headcount. The new pension software has generated significant efficiencies within our benefit calculations area. The legal department's given up headcounts. Member services is one area where we have invested headcount. If I went back and looked at what we had in 2009, I believe we're up in member services. But I think that's reflected in the fact that our service levels are at all-time highs, our call center wait times are at all-time lows. I think generally we've made a markedly different, we've made a marked difference in terms of serving our members and members in that area. So just wanted you to be aware where that headcounts come from. We're not just taking it all from one area.
Thank you, Mark.
Thanks, Mark. Does anybody want to ask any questions or comment on the notion of, we're reducing 2.1%. The city would like us to reduce 3%. I think that's very important as an optic, provided we're not cutting services or we're not cutting quality of what we do for our members. And so maybe, I don't know whether the board should be involved in that or whether that's really just a CEO issue.
Well, I do plan on sharing the same comments I just made at the full board meeting tomorrow so that the full board's aware of it and you could ask some questions about that. If the board was so inclined and really wanted to ensure that we were down a net 3.5%, there are ways that we could make that happen. They would be unpleasant, and we can certainly talk about those. They would involve reducing the level of services to our members as well as the internal level of service that we give to our coworkers within the office as well. But there's ways that we could get there. They just wouldn't be pretty, nor do I necessarily think they're prudent, given the long-term direction that we have been taking on supporting our members.
Thank you, Mark.
And this budget presentation goes in front of council as well.
It will.
Yes.
Ted and I will be presenting before the council in early May.
So
Ed?
it's not in a
Oh,
vacuum.
sorry.
Yeah, so it's not in a vacuum. We're not doing things over here without the
Yes.
city's awareness or ability to comment. All right. Sorry, Ed.
This is a budget that, in my opinion, has absolutely no fat in it. It's very hard to trim this budget. What we've increased, as Mark said, is member services, and that's been impetus, well, easy for me to say, of this board. We wanted member services to improve, so who's done what we've asked her to do. You know, maybe we're gonna talk about insurance later, maybe there's areas in insurance we can look at to cut some expenses, but, see where we could do it, I just don't.
I still happen to think that we're overpaying for our fiduciary insurance.
We are.
And we are projecting a decrease again for FY '18. The only element that I feel helpless to deal with is, once again, fringe costs. And when you think of fringe costs, you might think of them as, okay, that's your insurance, which it is. But I would say a significant component is related to the ADC payment, or retirement as they call it, on those items. When I first started here at SDCERS approximately 4 years ago next week, I was the first Prop B employee, and now we have 16. So when I look at our fringe rates, I look at who's getting allocated what. If you have a shrinking group of employees that are part of the pension system, that cost allocation starts to go higher and higher for those remaining people, regardless of what department they're in. And so that's something I'm also looking at. But once again, those aren't things we can control. And so at the end of the day, we do try to do that 3.5% at the level of the costs that we are specifically controllable.
And I think, was it $7.5 million for PE for
Yes.
all of our personal expense? And that is outside of our control, except for the number of people we have employed here. That is solely controlled by the city. So there's a big chunk there that we can't control, other than actually just cutting positions.
All right. Any other questions? Thank you very much, Ted.
Thank you.
That's an action item.
Oh, the action
Committee.
requested.
Yes. Motion to approve
Motion to approve.
the presentation.
Says
Yes, the
presentation.
presentation. And we'll do this all again tomorrow.
All right. The motion's been made by Ed, and I've seconded this. But does the approval actually come in this committee, or does it come in the full board?
It goes to the full board.
So this is a recommendation to approve from this committee?
Yes.
This committee's approval?
Right.
Okay.
Ready to vote? All votes are in.
And that has carried 5-0. The next action item, number 2, is staff's recommendation to revise the committee charter and process on selection of independent audit committee members. And Mr. Tran.
Yeah, good morning. So the audit committee is made up of 5 members currently, 2 trustees and 3 independent community members. In order to add some flexibility to that, staff had recommended adding a 6th seat, an independent member. After discussion with the audit committee felt strongly about capping that that committee to 5 members, but creating flexibility within those 5. So in front of you, I've left hard copies of what I understand the audit committee to request, and that is to have 5 committee members total, 1 trustee, 3 independent members, and then the 5th member can either be a trustee or an independent member. So the change would be currently that 5th seat has to be a trustee. The change would be either a trustee or an independent member. Staff does support the audit committee's revision of that, and this is an action item we need a vote.
The only question I had after thinking about this a little bit is who determines who the fifth seat is? Is that determined by the audit committee, by B&G, by the board?
B&G votes on that, and then the board approves that.
All right. There's no one in the queue. Motion's been made by Alan, second from Tom Sullivan.
Ready to vote? All votes are in.
And the motion passes 5-0. That brings us to action item number 3, staff's recommendation to revise the overpayment of benefits policy and underpayment of contributions policy. And again, Johnny?
Thanks. This item has been in front of you for the last 2 meetings, and the goal of it was to clarify what efforts the board takes and what efforts staff is taking in resolving overpayment of benefits and underpaid contributions. So with the trustees' input, I believe that the revisions recognize the board's authority to resolve these matters within their fiduciary duties and with consideration of the IRS correction guidelines. The revised policies state the board and CEO will use reasonable efforts to address these matters, and reasonable efforts include consideration of the facts and circumstances of each case surrounding the correction, the IRS correction guidelines, and input from the plan sponsor. A small tweak to the policies is also that any overpayment or underpayment of over $10,000 will bring back to the board for an update on resolution of that at the next meeting.
Do we have any comments, questions? Mr. Sullivan? Does your mic work? There you
Button hasn't been pushed in a long time. Can you explain in the one about the collecting interest whenever feasible, what's the rationale of that wording?
Yeah, absolutely. This is a policy document, and so to get into the details of each case would be very difficult. Each scenario is different, and so that adds some flexibility to what the board should decide to do in any future case, and I can't really describe what's going to happen in the future, but also recognizes what policy the board has. So the policies the board has is to correct these benefits. It also has the goal of collecting full payment when possible. Short of that is when the feasibility or reasonable efforts takes consideration. So an example, Tom, is we've realized we overpaid someone who has since passed away, and that person has no estate. The board shouldn't have a policy that tries to collect money from a deceased person who has no money. I think that this flexibility recognizes that.
How about when the associated legal costs exceeds the amount? Would that be something where it would get passed on?
I believe that could be another consideration the board and the CEO can take into account.
And where does that get absorbed in the budget?
There's a few ways. I mean, it doesn't get absorbed in the budget or the administrative cost of that. It would be something that if it's collected short of the full amount, then we have within the policy to request that from the plan sponsor to pay that difference.
I'll make that a slightly more complicated process here. So if, in the board's collective wisdom here, it does not make sense to pursue collection from someone, IRS guidelines require us then to collect it from the plan sponsor. So we would then go to the plan sponsor, request for them to pay this, which they could choose to do or not do. If they choose not to do it, then it kind of comes back to the plan sponsor and our board. Do we want to push this expense into or this amount into the unfunded actuarial liability? That's likely what we would do. At that point, the city has a choice of coming after us if they think it's inappropriate for us to put it in the UAL or not. So it eventually gets into the UAL, and then there's this game of chicken, sort of, so to speak, as whether someone wants to pursue legal action to object to it going into the UAL. But we first have to formally request the city pay for it directly. Does that make sense?
Yes. Go ahead.
No, this has come up a couple times, and it's come up several times, and our duty is to the trust fund and the ability to pay benefits. So we should be making decisions that provide security to the trust fund. And sometimes it may not be prudent to pursue $1 million worth of litigation for a $20,000 overpayment.
Exactly.
So or underpayment or under contribution or whatever. So it's hard to talk about these things without going into specifics of different cases. But as I've been on this board, we've made that decision in the past. And it is within our, I believe, within our fiduciary duty to make that decision. So, Johnny, you want to edit that at all?
I believe so.
Okay.
I agree with Alan, and I think these policy changes are well considered, and we've thoroughly vetted them, and they provide appropriate and needed flexibility, and at the same time, they are transparent and eliminate some of the confusion that I think existed before. So I'm prepared to make a motion unless anyone else wants to speak.
And just to hit on what you said, they're in accordance with the IRS guidelines, which
Yes.
is very important.
I've made the motion. Alan has provided the second.
Ready to vote? All votes are in.
And it passed 5-0. That is the last of our action items. That moves us to new business. And the first item under new business is also Mr. Tran with semi-annual travel and training report for the second half of 2016.
Thanks, Val. So you have our report in front of you. It details the expenses for travel and training and due diligence that we've done for last 6 months from July to December last year. 2 talking points: we're under budget, and we've actually spent less last 6 months than we did previous 6 months, for what it's worth. Questions about that?
You know, talking earlier about where can we save costs, do we have any opportunities to do more in-house training and less outside training, bringing a trainer in as opposed to attending conferences?
I believe that can be done. I know that a lot of the training that the trustees go to have to do with investments, and then investments has brought in some individuals to speak to specific points there. We bring in fiduciary counsel to give you training. We bring in Ms. Fulhurst from the city for ethics and training as well. So there are ways to reduce that budget.
Maybe that's something we should look at.
Yeah, I agree. I think in-house training is a prudent way to get some of the basics done. One of the things that I do enjoy about the training, and I don't travel that much for the training, is if we're only learning from those within and those that we or staff select, sometimes we miss a perspective from somebody on a different organization or something. So I think the travel component to our training and the conference, to whether it's Calipers or IFEBP or whoever, there's an opportunity for perspective there. But I do agree that in-house training was definitely a more cost-effective way to go, but the travel is still an important component.
Just 2 other things I'd like to add relative to staff training in-house. The legal division has a schedule where they walk us through our benefit provisions with all of our staff members. They do that on a regular schedule, so we do in-house training on the technical aspects of complying with our plan document. And then we did a employee opinion survey a few years ago in which the staff members here felt that we could do a better job on training initiatives. And so one of the things that Luli championed was working with the Fred Pryor organization to get a volume discount on doing in-house training for staff members. So we've had around 20 of our staff members, 40% of our staff, that's been doing these very cost-efficient Fred Pryor sessions in-house, which is a lot cheaper than sending them out to do some of the training there. So really good reception on that. So we've, I think, effectively managed that as well.
I think something, I just came to me because I think the way we train as the board is we typically do it in a meeting, right? And so it's a public session training, and it lengthens our board meeting. But if there was a way for us to participate in some of the training that's done in-house with staff, and I would leave it up to Mark to determine what would be appropriate for board members to attend. If there's specific staff training, Mark, that you think that we as board members could benefit from, I think it would be prudent to maybe invite some board members to some of that staff training. And I don't think that gets us into the Brown Act issues, because we're not training as a whole board or discussing the policies. So,
I'll look at that, Alan.
Good idea.
okay.
I had one thing to point out. Johnny, there's a reference to Mark attending Caliper's Principles of Management Pension Management Conference in Malibu last August. I think I also attended that as a panelist, and there's no reference to that in the report. It probably needs to be added if there were any expenses associated with it.
Thank you, I'll look into that.
All righty. That's it.
Yes, you did. Thank you again for helping out with that.
Somebody actually reads these things.
It's usually us, more than anybody else.
All right. Next item, non-action item, is the discussion regarding insurance. Mr. Tran.
Is that mine?
Yeah, that's yours.
That's you.
Tab 27.
I have to. It's over here. So this is a non-action item and something that Mark wanted me to present to you just so the board gets an understanding of how an SDCERS is covered by insurance and when it's not. So the purpose of this presentation is two things. I just want to educate you on what insurances we have and give the opportunity for this committee to discuss any additional types of insurance that they may want to explore. So as you know, that SDCERS was created as an agency of the city of San Diego, and all of its employees at SDCERS are actually city employees. As a result of that, a lot of our coverage comes from the city. Workers' compensation, the city is self-insured for their employees for workers' compensation and includes SDCERS employees. The city of San Diego has a combination of self-insurance and policies for general liability, as well as property liability, for which SDCERS is also covered for. So something should happen to our computers, our personal property, the city has explained to us that that would be covered. The city also has a master crime policy, a fraud policy, something internal theft that would cover any loss from SDCERS from one of our employees. This arrangement is very similar to other public pension systems. County systems generally don't have their own insurance. They're covered by the county itself or their plan sponsor. SDCERS only purchases one self-standing type of insurance, and that is fiduciary insurance. And the insurance broker, Barney & Barney, that we work with, has not recommended any other type of insurance for SDCERS other than cyber and data insurance, which we talked about at the January meeting. With that, my very short presentation, is there any discussion? Any questions you have about our coverage or want me to explore any other type of coverage?
Well, I think the question comes up often about insuring against underpayments, overpayments, or under-contributions. So what are some of the challenges with trying to provide such a coverage?
My understanding is there isn't a product out there that someone will insure us against our mistakes. Maybe there's too much self-dealing in that type of policy. So one doesn't exist. The closest thing we have to it is something like if SDCERS itself were to steal something, an employee, but that's covered by the master crime policy and wouldn't cover overpayments. Even your fiduciary policy doesn't cover the actual overpayment. It just covers the expenses and the claim of fiduciary duty breach.
We actually looked into this pretty deeply about 2 years ago. It found an article published by a scholar recommending that kind of insurance, be available in the marketplace. We even called him, I think he's at the University of Chicago, and interviewed him about it. And I think we confirmed that there is no policy or product available to purchase.
Yeah.
Mark, do you remember?
Beyond that, no, I don't. Even if there were such a policy, then the question comes in, is there a deductible or not? And if there's a deductible, we don't have any assets, meaning that if we paid anything under a deductible, it would be being directly charged to the city, who has steadfastly said, you can't charge me for overpayments. If I had insurance, I would be passing that insurance cost onto the city, and they say, you can't make me pay for overpayment insurance. So we can't get a product, and even if we did, it'd be problematic.
All right. No one else in the queue. Thank
Thank
you
you.
for that report.
Fortunately, Johnny doesn't make any mistakes, so we don't have to worry about that happening here.
Jessica Packard is here to update us on the trustee election.
Push the green button, sorry.
Green.
Is that better?
Yep.
Can you hear me now? Okay. All right, nice to see all of you. We are currently in the process of 2 elections. Our Allen is running against Michael McBride for the active fire safety trustee seat. And as of this morning, we've received 73 votes from our members on that election. Jeff Wallace and our Tom Battaglia and David Onate are currently running for the 2 active general trustee seats. And as of this morning, we've received 119 votes from our members. Voting ends 5 p.m. on Monday, March 20th, and the winners will be announced that week. And it's very exciting with this new online process how the participation levels from our members have gone up. So I think this process has been great so far. And with that, I'm happy to answer any questions you may have.
Since I have no stake in this, I'll ask a couple of questions. I'm curious.
Sure.
As votes come in, is there a running tally kept, or do we keep them in a lockbox until all the votes are in?
The online vendor that we work with gives me daily updates or whenever I need them. So I have access to that information in real time.
Do we have a policy about not accessing the information or anything like that?
I don't see the results. I just know the amount of votes that are coming in.
Okay. And is there any policy gap because of this new technology and everything that we're doing that we might need to fill? Or do existing policies cover the election process without any change?
I'll defer to Johnny on that one. I think as far as we have amended the board policies to accommodate the online election process to a certain extent, but it is pretty open as far as the viewing of the results.
I'd have to look at the policy again to talk about any safeguards that you're speaking of specifically, but we did recently amend the policy, which required an old telephone system to now be able to use this online system. But I will look into that and let you know if I have any concerns.
Does anybody else want to?
I had a member, I think he was voting for me, say he couldn't vote because his location was rejected by the server. So we'll call the helpline. I don't have anything. Have you heard of that?
I have not heard of that. However, the help system associated with this online vendor has been remarkably helpful, and they're accessible through email and phone, and they can respond right away.
And
I have heard that our members that have called the help desk, they have been very helpful.
Great. Yeah, and again, if there are any issues, I'm here to help as well.
terrific.
Val, I thought your concern was the Russians hacking into our election system here.
Now I'm concerned about voter fraud.
Cynthia wanted to
Cynthia had
add
it.
something.
Ms.
Val-
Queen.
Hi, thanks. I just had one thing I wanted to add. Is this on? I just want one thing I wanted to add to answer your question regarding our policy and how we are conducting the election. When Jessica did the research to choose a vendor, of course, we went through the competitive process, and Dave Bond helped us, and we looked for vendors that had extensive experience, and we asked all of these questions during that vetting process to ensure that the votes were safe, that it was independent. So the firm that we're working with is actually the oldest one in the country. It's been doing these types of elections for broad and large groups for 25 years. And a reason that it's important to us to have a third-party vendor running the election, and for Jessica and us not to have the results in a daily tally, is to keep the election completely legitimate. Yep. They serve as the official certification of the votes, and we were very pleased with this arrangement because it ensures that the election will be completely legitimate. Jessica can't pick her favorite. We can't lose a piece of paper. You know, it's just an excellent, very tight system. And so we have reviewed the policy. We updated to go with this. And if we determined that we needed to add anything to it, we could do that in the future. But we are very pleased with the vendor that we're using. And thank you for asking about that, because we want to have a very accurate election process.
Well, I was very pleased that we were able to get the same vendor that did the voting for the Best Picture at the Academy Awards. Kidding. All right.
I will also add that, and thank you, Cynthia, that we chose this vendor also because they were ranked high in their online security. They've been, and that's an issue that we take very seriously here.
Terrific. I see no one else in the queue.
Okay.
Thank you very much.
Thank you.
That brings us into the old business part of the agenda. And the first action item under that is Susan Youngflesh with staff's recommendation to deny the appeal of Robert Mulcahy. Mr. Mulcahy has turned in a speaker slip, so after Susan Youngflesh makes her presentation, Mr. Mulcahy will have an opportunity to comment.
Thank you. So staff recommends that the board deny Mr. Mulcahy's appeal to waive interest. In 2003, Mr. Mulcahy drop retired. His final average salary was overstated by about $150. This is because he entered drop mid-pay period. He has now paid the principal but appeals the interest. We discovered the error in 2016. At the last board meeting, the board has requested that staff go to the city and ask for payment of the interest. Staff did so, and the city has declined paying the interest. So we stand by our recommendation to recoup the interest from Mr. Mulcahy, as IRS guidelines require that we must keep the system whole. And I'm happy to answer any questions.
At this point, the only person in the queue is Mr. Mulcahy, who has, I believe, 3 minutes. And Mr. Mulcahy, the floor is yours.
Thank you, gentlemen. My name is Robert Mulcahy, and I was overpaid according to the board's policy. I was not aware of the overpayment. I did repay the principal as requested. I'm contesting only the interest. It seems to me that there was an error in the accounting system, which I'm not aware of, and I don't think I'm responsible for an error that I did not cause. Therefore, I'm willing to repay the principal, but the parties responsible for the mistake should be responsible for paying the interest. It's a matter of simple negligence, causation, damages. Someone was negligent, caused damages. The party responsible for the negligence is responsible for the damages.
Thank you, Mr. Mulcahy. This is an issue that is very troubling to the board, and we have been through this issue many, many times, including extensive discussions the last time you were here before the board. And I'm not sure that that anyone could possibly disagree with you that the fault is not yours, or would suggest that you were aware of this overpayment situation. But I think based on extensive discussions in many cases, the board feels constrained by the plan sponsor's position, IRS guidelines, and its own fiduciary duties on this issue. And it's no reflection at all on you or any suggestion that you had anything to do with this. And so I think all we're going to be able to do to you is apologize for the inconvenience and for having this happen, but act in accordance with the constraints that I think we feel.
One question, are there any other administrative remedies that should be exhausted before presiding another matter?
Well, I think that this is your
Final administrative remedy.
As far as I know, although I can't give you legal advice.
Well, that is a legal question.
And you're a lawyer as well as I, but I believe this would be the final
right.
administrative action. Johnny, do you have any different view on that?
I'm done with the board should deny his appeal, then he can file a writ of mandate with the Superior Court.
Yeah.
Thank
And,
you.
and you won't be the first.
Yeah. So, and just to clarify, I mean, this is just a recommendation to the board. So tomorrow, if the board follows the recommendation of the committee, that would be the
final action.
The final
Correct.
action.
Very well.
All right.
Thank you, sir.
Anyone else want to have any comments or questions?
And there's no ability to stop the clock running on interest while this thing is under process or under appeal?
I don't believe there is. I think
It's my understanding, and I'll let staff correct me if I'm wrong, or if Marcel wants to jump in
I'm
there.
not sure if that microphone is working, that's why.
Good morning. So as Mr. Mulcahy mentioned, he has already paid the principal. Once he paid the principal, we stopped the interest
The interest
clock.
stops running.
Okay.
But aren't we, it said here the clock is not stopped running, and I thought he's paying interest on the unpaid interest amount, the balance. This is clear, what we're looking at, that interest is still accruing.
My understanding is it wouldn't be, so I will double-check with staff,
Right.
then I may stand corrected.
Mr. McKay, do you know the answer to that question?
Rachel, mean silence?
Yeah, you don't have to answer me.
I mean, I guess I would hope we're not paying on interest on interest, but it sounds like we are.
I think we answered that. I think I asked that question the last time, and I think the answer is that we do.
Because it compounds.
It compounds, and I thought it compounded annually or monthly, I've forgotten which, but
And I guess there's no ability while this is under appeal or process to stop the clock.
Other than paying the interest amount as well to stop the
No, I
compounding.
know.
Right. Is that,
That would, yeah, I agree. I stand corrected. So it does, but it's only on the interest piece of it, not on the principal
I
piece. So
understand.
it is
and how,
significantly less.
is it a monthly compounding or an annual?
Monthly compounding.
Monthly. Okay.
so with that said, absent, I know we're on Mr. Mulcahy, but if a member receives that correction notice or the overpayment notice, and a couple months go by to process or to get through the appeals process, are we compounding interest in that time period as well? So that what the notice they get and what they ultimately have to pay 2 or 3 months later is a different amount?
Correct.
Okay.
Yes. For overpayments of benefits, yes.
Or overpayments, benefits, or under contributions?
Underpayments of contributions compound annually,
Annually, okay, so that.
because we
okay,
only
so-
apply interest on the accounts annually. I'm sorry, that's.
Okay, so
back, right?
that's a good distinction, because I think that's confusing to many. So under contributions compound annually, overpayment of benefits compound monthly.
Correct.
Okay.
All right.
Okay.
I don't see any further comment or question in the queue.
Want a motion?
No mo-
We
no
need
button.
we need a button. Sorry.
There we go.
I made the motion. Carol Broad provided the second to approve staff's recommendation.
Ready to vote? All votes are in.
Motion's carried 5-0. Again, Mr. Mulcahy, I'm sorry that this is the result, and wish you well.
Thank you. A question, what happens tomorrow at the full board meeting? This goes forward?
Yeah. Is it on the consent agenda, or is it separate?
Most likely on consent.
It would be on consent unless you pulled it.
So, Mr. Mulcahy, this will be on the consent agenda tomorrow unless, for some reason, it's pulled. If you want to address the full board and you put in a speaker slip, a member of the board could pull it from the consent agenda if that's what you'd like to do. Otherwise, it'll just roll over tomorrow, and that will be the end of your administrative process.
Thank you, sir.
All right? All right, next item on the agenda is staff's recommendation to grant the appeal of Mary Ann Toomey. And again, that's Ms. Youngflesh.
Thank you. Staff recommends that the board grant Ms. Toomey's appeal to waive interest and pay principal only. Information has come to light since the last board meeting, which makes staff believe it is no longer viable for staff to seek interest repayment from Ms. Toomey. I'd like to walk you through a timeline. So in 1993, David Toomey, the member, retired. At the time he retired, he was divorced. Pursuant to his divorce judgment, he was to pay 8% of his benefit to Ms. Toomey. When he retired, he chose the Social Security integration option. This option allows for a higher benefit until the member turns 65, at which time the benefit will then be reduced under the presumption that Social Security will kick in. At the time he turned 65 in 1998, his benefit was reduced, but Ms. Toomey's benefit was not, and it should have been. In 2016, our internal auditor found this error while conducting another audit. Staff immediately corrected Ms. Toomey's benefit, which reduced it by $100, and sought repayment of the principal and interest from Ms. Toomey. Ms. Toomey agreed to pay the principal amount, but appealed the interest. At the last board meeting, the board requested that we seek interest repayment from the city. Staff did so, and the city declined to pay the interest. In preparation for this meeting, staff reviewed the hard copy of Mr. Toomey's file. Buried within the file, staff located a handwritten sticky note which indicated that we were aware of the situation in 2002. Based on that, we no longer feel it's viable to collect interest from Ms. Toomey. The system will remain whole if we don't collect interest from Ms. Toomey, and that while we're not collecting interest from Ms. Toomey, we're also not paying interest to Mr. Toomey. This week,
Is that why the system remains whole, because it offsets?
yes. This week, Ms. Toomey has now rescinded her agreement to pay the principal amount. And Cynthia Joyner has her recent letter that will be distributed to you in a minute. Our appeal policy does not provide an option for Ms. Toomey to change her appeal at this point. Upon the board's approval of staff's recommendation, if she is unhappy with that, the appropriate procedure would be for her to seek a writ of mandate with the Superior Court. If the board grants staff's recommendation to waive the interest for Ms. Toomey and only pay the principal, then Ms. Toomey can either pay the lump sum or be placed on a payment plan of $200 a month, which will allow staff to recoup the principal amount over Ms. Toomey's life expectancy. Cynthia Joyner should have distributed the letter to you now, and if you have any questions, I'm happy to address them.
I think at this point, we've got a speaker slip from David Toomey, Ms. Toomey's son, who will have 3 minutes to speak. Does anyone want to ask any questions of Ms. Youngflesh before Mr. Toomey has his opportunity to speak? All right. Mr. Toomey, you've got 3 minutes. Thank you, sir.
Yes, I'm David Toomey. I'm Mary Ann L. Toomey's son. And we've been going through this process for 9 months now, and we've been deceived the whole time. And I talked to the IRS, and they explained how the hardship policy works, and we qualify under the hardship policy all the way, and you're not getting any money from us. You're getting absolutely nothing. And I want this to go to a judicial review, because you guys are clowns. You've been doing this wrong the whole time, according to the IRS. And so let's go. You guys want to bring it on? Let's go to court. And if I don't see green lights the whole time and we pay absolutely nothing, then I'm going to flatten you guys in court with a writ of mandate and heavy damages. And that's my bottom line. So bring it.
Ms. Youngflesh, would you address the issue of the IRS hardship policy that Mr. Toomey's raised and that's raised in this letter that we were just provided with?
Yes. So you've asked whether staff has considered financial hardship. First off, let me start by saying that we are very sympathetic to Ms. Toomey. However, the board and you have a fiduciary duty to keep the system whole and for all the members of the system. The IRS financial hardship guidelines allow us to consider who we can recoup the money from, being the plant sponsor, the overpaid or overpaid individual, or a third party. Here we've reached out to the plan sponsor and they have declined to pay, which leaves us no alternative but to seek repayment of the principal from Ms. Toomey.
In a hardship situation where the plan sponsor refuses to pay, does that then fall back on the system to collect it from the member even in the hardship situation?
Yes. We have to keep the system whole and recoup it from either the member or a third party, and we don't have a third party here.
Do we have any ability to seek recoupment through the courts from the plan sponsor?
I would
In other words, could
defer
we
to
align
Johnny.
against the plan sponsor to recoup this amount, or are we really limited to this one option?
Val, I believe you're correct. In theory, you could file an action against the plan sponsor to try to recoup this money. I'm having trouble trying to formulate a claim or a requirement that the plan sponsor would have to do so, but I suppose you could.
Okay. Anybody else want to weigh in on this? Well, in terms of the recommendation to grant, that seems to me to be fairly straightforward and sort of unrelated to this other issue that Mr. Toomey has raised and Mrs. Toomey has raised by her letter, which is collection of the principal. So I appreciate that we're not holding up that, but I do want to explore this a little bit further so that we don't misstep. What would happen next with respect to the principal? Would SDCERS engage in a collection effort?
Now, if Ms. Toomey refuses or does not pay the lump sum of the
We
principal,
withhold.
then by default, it would be going to a payment plan of the $200 per month, which would start soon, and that would be the amount that would be required to recoup the amount during her expected life.
And that would be deducted from her monthly check.
I believe so, but I would defer to Marcel or Cynthia.
So what's going to happen going forward, assuming we approve this recommendation, is that the principal will be deducted from Ms. Toomey's monthly pension check at the rate of $200 a month until paid in full, and Ms. Toomey may or may not seek legal redress in the form of a writ of mandate.
Correct.
Got it?
Yes.
Okay.
And there's no statute of limitations on this.
We've addressed that issue before in terms of withholding from a member's check where the error occurred long ago, and I think our conclusion was that, no, that's not barred by the statute of limitations. Is that right, Johnny?
That's correct. Correcting this administratively is not barred by civil action statute of limitations.
Nor is the writ of mandate claim barred because it happened a long time ago when we just now start to engage in our administrative remedy. All right? So I don't see anyone else in the queue or looking like they want to speak on this. I think we could have a motion on the staff's recommendation. So I've made the motion to approve staff's recommendation, and Ed Katroser has seconded it.
Ready to vote? All votes are in.
And that motion carries 5-0.
Thank you.
All right? Thanks. That brings us to Marcel Rossman with the report on overpayments to members exceeding $10,000.
Good morning. So you have my report in front of you. The only updates I have to my report are the two action items that the committee just approved, which was to deny Mr. Mulcahy's appeal and to approve Ms. Toomey's appeal. I'm happy to answer any questions you may have.
I think we're satisfied on those issues. Thank you very much. It's nice not to hear any new ones. All right, so let's move on then to the status reports, and the first one is from Mr. Tran at Legal.
Thank you. You've got my legal and compliance report in front of you. I just want to highlight two things. One, your Form 700 or your economic statement of interest. Your annual filing is due April 1st, so please don't be late. The second is I wanted to highlight the use of the city's fraud hotline to notify SDCERS of alleged fraud. So there's several ways that an individual could report alleged fraud to us, and one of those is a hotline operated by the cities. And every time the city gets a call about SDCERS, they forward it to us. It has a formal process for evaluating it. This recent complaint had more to do with personnel and use of time, and so really didn't rise the level of fraud, but just wanted to let you know that these safeguards are in place and we are using them. Any questions about my report?
Thank you very much.
Thank you.
David Bond with IT.
In addition to my report, I'd like to let the board know that we have enrolled in the Interstate Information and Sharing Center. This is a monitoring service that will look for suspicious activity to our websites. The program complements the DHS scans that we're currently doing. We would be notified if there's suspicious activity or if we're being attacked by a known nefarious website or origin. This service is free of charge, and it began in February. And with that, I'd be happy to answer any questions.
There are none. Thank you very much, David. Our call center report from Cynthia Queen.
Hello. Actually, I would like to speak with you about a recent meeting with retirees. We greatly appreciate our customers and always appreciate their input. So we had a meeting with the Retiree Issues Task Force. Charlie Hogquist was participating with us. We met with the risk management team as well as Marcel on the health team to talk about the upcoming city retiree health program and to gather input and have a dialogue. That's been a wonderful process. And we are preparing now for the upcoming retiree health presentations, which will be held on April 5th at the Balboa Park Club Ballroom from 10 to noon. That's being widely advertised by the groups, and everyone will be receiving a postcard invitation to that. I would like to give another shout out to our call center because I don't want them to think they're being taken for granted because they continue to rock their call wait times. They are doing a great job. And I want to take one last second because I did invite several members of my staff to for an education session today to listen to some of our presentations. I'd like to thank Shawnquanna Pemberton, who's the wonderful supervisor of the call center. I'd like to thank Mateo Osorio and Antonio Roberti, who are in the back row. They have handled a very large number of the correction cases and work very closely and compassionately with our members, and they all do a really great job. And I want to make sure that I always tell them enough how much they are appreciated and how much our members appreciate them and their diligent work. So thank you very much.
Thank you, and thank them.
They're invisible now.
All right, Marcel Rossman with Benefits Administration.
Hello again. So you have my report. One thing I wanted to add a little bit on. Right now, Benefits Administration Division, they haven't been in my last couple of reports. Everything's running swimmingly there. They're continuing to process retirements, process PSC, process reciprocities. The area we've been spending a bit more time on is health. For your education, we have about 6,600 retirees who are receiving some type of health benefit in retirement from the city of San Diego. 1,100 of them are what we call privately secured clients, so they are not taking advantage of the health retirement plans that the city offers. They are going outside of the city and obtaining their own insurance and submitting for reimbursement. So that's 1,100 members that we are potentially touching a piece of paper on every single month to get them processed. We've been working very closely with the city to make sure that those policies and procedures around that are very clear, and as well as looking at how we have designed IRIS, our new system. When we designed IRIS, this was not as big of an issue as it is now. So we are working, Michelle Wegner, Sandra Kloss, and I have been working very closely to make some updates to IRIS so that we can better capture this information in IRIS rather than it being the extremely manual process it is right now. And happy to answer any other questions you may have.
Is that because they live out of state or they're not local residents and can't obtain or utilize our health plans?
You would think so, but actually it's not. Very few of them live out of state. It is mostly retirees who are being covered under a spouse's plan somewhere else, and a significant number as well that have gone on to subsequent employment. So they've retired from the city and now they're working somewhere else and have health insurance through their new company. There are some that are out of state, but that is definitely the smaller part of it.
Oh, good to know. Thank you.
Thank you very much. Our last status reports are from Ted LaSalvia, 5 finance reports. If you would just run through them. Don't wait. Run.
And all of them but one has numbers in them, so. Actually, even the 5th one has numbers in them.
We've all submitted our questions and comments to Ed Katroser, who will handle all the questions and comments.
Wanted to update you real quick on the finance division. We filed 10,400 1099 Rs and Form W-2s using a third-party provider that did an excellent job for us. My first year, full year, Accountant Ford did a wonderful job throwing her a bit into the fire, but we worked through everything diligently. I'd like to once again give another shout out to Marcel Rossman, who has always dealt with issues and questions and comments from the Finance Division with respect to member benefits and the tax consequences of certain types of payments. So as you can see, you should have a pile of papers in front of you. We are current with financial reporting through January 31st. That's actually 1 month further than this time last year. In addition, we've completed the December 31st budget versus actuals, which I gave a little bit of color on when we did the budget discussions. And with respect to our current priorities, one of the things Val will be very, very pleased to hear is that in addition to the schedules that I predominantly give that he probably thinks he can do by rote, I will then try to design a little different formatted piece of financial information to include, to change things up and catch him off guard a bit. But at the end of the day, the idea is that financial information can be presented graphically, so that's really something that I'm going to look to do, in addition to providing the basic financial statements, which I will continue to do so.
Sounds like accounting for dummies.
Don't say anything, Ted.
See, Mark knows me well. He could tell by my eyebrows. Like, his eyes got big and wide. So we're going to talk about the 6-month budget versus actuals. For the 6 months ending December 31st, we have administrative expenses of $6.5 million. This is 4.9% below the $6.8 million budget. Salaries and fringe costs are at $3.7 million. It should be noted that while you don't see the breakout there, fringe costs were actually higher, salary costs were actually lower than budget, primarily because of the open positions. Fringe costs, once again, were higher because when the city finalized its FY17 budget, they came in with a significantly higher rate. IT costs are at about $900,000, 7.8% below budget. Primarily under budget from computer hardware supplies and technical support labor, but they are projected to be on budget for the full year. Dave does a good job of managing his budget. There is one element we haven't paid for. It's something you see on the budget as a line item called citywide costs. This is an item we have accrued for now for 2 years, 2 full years. It's an allocation of the SAP system allocation from the city of San Diego. 3 years ago, we received an invoice from collections at the city of San Diego related to an allocation of SAP costs. So consequently, we put this in our budget, but turnover in the various divisions that handled this, we have been unable to identify when we will receive an invoice, but it's something that we will stay diligent on, and I will continue to accrue because at one point in time, they might give us an invoice for multiple years. Legal costs are at about $145,000. This is 47.3% below the budget. Lower litigation, lower fiduciary costs, and lower tax consultations drive that value. General ops at $1.8 million. This is on budget. We have lower fiduciary insurance, audit services, travel and training, which is excellently managed, and disability app costs. Now, offset by increases for temporary labor and health. Like I said, we have lower salary costs because of open positions. We have temp labor currently in health. We also had costs related to the board elections, and then we had increased actuary costs from all the discussion generated from the experience study. This was non-retainer work, additional work that had to be prepared in relation to all of those questions. Investment management expenses of $15.7 million. This is 6.2% under the $16.7 million budget. As I originally alluded to, the investment management expenses are going to run under budget for the remainder of the fiscal year because we started off at a lower position than when we had budgeted for FY17. So that commentary will be with us for the next 2 quarters. CapEx is only $8,000. We had projected about $25,000 for computer equipment replacements. That's projected to rise to $30,000 for the full year. But once again, the SDCERS software has been moved to FY18. And with that, I will open up the questions to open up the floor to any questions you might have on the budget versus actual.
I do have a question. It appears as though our total administrative expenses are 4.9% below budget on a year-to-date basis. Is that right?
Correct.
And you've indicated that that's not merely a matter of timing, but that those may be real savings?
Yes.
So if we are saving 4.9% off of our fiscal year 2000, this is the 2016 budget?
Yes, yes.
Because I'm
not-
kind of wondering why we can't get further than 2.1 out of our 2018 budget.
Correct. That's
with
why
that.
we wind up with projected, that's why the projected costs on the actual budget discussion are lower, so.
We're missing the intermediate year.
Correct.
Okay. Never mind.
You said Ed was going to answer all those, ask all those questions. I was expecting
I
Ed
reserved
to-
a stupid question for myself.
Okay. I didn't say anything, Mark. So moving on, we have 3 sets of financial statements. In the interest of time, I will only address the latest current results, which are year-to-date. So year-to-date, we have a planned net position of $7.1 billion, total investment portfolio of $7.2 billion. The investment portfolio is up about $665 million when compared to the prior year. From an income statement standpoint, we have an increase in net position of about $264 million. This is made up of contributions and investment earnings of $558 million, offset by total deductions and benefit payments of $294 million. The biggest component is an increase in investment income. We're at $354 million of net investment income as of January 31st. When you compare it to the prior year, last year, what a difference a year makes. We were at a net loss position of $398 million. The schedule of reserves total $5.8 billion, an increase of $99 million over the prior year, and you might wonder where the rest of that increase went. If you take a look at that schedule, you see a significant jump up in the unrealized gain or loss on investments from last year to where we stand currently. So far, the year is doing pretty well for us. With that, I'll open the floor to any questions you have on that. Val?
I defer to Ed. I have no questions.
No questions.
All right.
Thank you very much.
Thank you, Ted. That brings us to questions and comments from the chair, trustees, and staff.
Can I circle back to something we talked about earlier? And that's the request by the city to, reduce the budget by the 3.5%.
Yes.
When you talk to the city, this might be a good time to remind them, and it gets back to Val's issue, of why our fiduciary liability insurance is so high, and that if we have more of a backing from the city attorney, and we have guarantees that we don't have right now, that could, significantly reduce our fiduciary insurance.
Right.
I think, this might be the time to raise the issue again.
Yep, can do that.
Excellent point. My understanding is that this is the last meeting that Ed Katroser will attend as a member of the Business and Governance Committee during this term of, on the board.
Right.
And I just want to say that, Ed was the last chair of this committee and has served on this committee with distinction for many years. And I just want to say, on behalf of my fellow committee members who may want to weigh in, that we really, really appreciate what you've done for the board, the members, and this committee in particular. And it's been an honor and a pleasure to serve with you.
Thank you.
Yes,
Thank you
very
very
good.
much. I feel the same way about this being an honor and a privilege, and I'll say a few words at the board meeting tomorrow, but it's a genuine pleasure coming to these meetings. You wake up, you feel energized, and you want to come, so thank you.
Mark, do you have anything you want to add to the agenda, or shall we adjourn?
Adjourn.
Great, meeting's adjourned.